Yo, what's poppin', guys? Welcome back to another trading recap with me, Oscar. Today we're going to talk about a trade I took on ICEA, and yeah, I did some mistakes and I did some good stuff. So we're basically going to recap that. We're going to also talk about a quick fix, or not a quick fix, but a quick tip that at least works out for me, how to judge resistance more precise rather than just looking at the yearly chart. We're going to talk about some fear of execution because that is something that I've been challenged with lately, and we're going to talk about some statistics as well. But first off, let's get into the trade and talk about ICEA in general, or what I saw yesterday as I traded this. So what you have in front of you now is the 2-year chart of ICA. And first off, when I look for stocks, and remember, this was a short. So what I look for when I want to short something is first off a bag holder chart. And what is a bag holder chart? It is a chart that is basically depressed, going downwards over and over again. So those people who bought up here are, if the stock spikes up, is very likely to become a selling pressure because they want to break even, and that is also what this strategy bases around, has its core around, and is basically what all main or all big short strategies has in common. The psychology behind it, or the explanation behind it, is that you, as a short seller, want to short where you think as many people as possible is going to sell, and further on you want to look, okay, hey, what's that level typically going to be, and to judge that, you look for where the most volume has been traded, so where has the most shares been exchanged. So to do that, you find the biggest volume, and to look for individual volumes is a very good strategy. It's better than looking for consistent, or if you find both, that is good. But so you can clearly see that this day was the biggest, and now yeah, whatever. So you can see that this is the biggest day in history as a volume for like 2-3 years. If you even zoom out, that you can see that this is the biggest day of volume in history. And remember that we're gapping up in the pre-market, and we're kind of near that level. So it becomes natural that this is the resistance play that we're going to base our trade off. And here's where the first lesson comes in, and where the quick tip is, which is how to judge resistance more precisely than just looking at the yearly chart. Looking at the yearly chart don't get me wrong, it's a perfect strategy because you base off the high of day. But if you want to be more precise of where you think the stock or where the stock has a reason to start retrace, you look into the intraday chart, because it gives you so much more information. And what I mean by it's giving you such more information is that when we get up to these levels at the 220s or 230s, or even as I saw the stock at the 250s or 240s, I want to know, okay, hey, at which levels is there a reason, or at which levels is there as many bag holders as possible, so that it's logic if it retraces that at that point. And I hope that makes sense, because as I said earlier, the psychological aspect, or the core behind any shorting strategies, is to find a resistance where people are willing to sell, so that so that the price will decrease. And now I activate it, I want to duplicate. And so what I usually do is I find that high level, which is of importance, because first and foremost we have retraced 2 times or reversed at that price level. I choose this high price level instead of the closing high because we have, as I said, been retracing or reversing 2 times, and we have been stuffed up here, so people know that this is a level that was of importance last time that stuffed, so they might be willing to sell here. What the second line bases around is I want to see, okay, at what level within the higher price range up to the top has the price been traded the most. And the more candle you have within this range means that the stock obviously has been traded more, like time-wise. But of course you should check the volume. Let's say this area was only within this kind of volume, then it wouldn't have been of the same importance as of right now, where the major volume as of the afternoon was traded within this specific area or price range. So that's how I judge resistance more precisely. It gives me the edge that I know in sort of, I get a feeling for where most people are likely to be in from. So what I know by trending out these lines is, okay, the average people that traded this in the higher range is in somewhere from within the 230s up to the 260s. So that is going to be my resistance point. So I'm probably going to start size in when we reaches this 230, size in even more when we get to 240, and then of course you want to try to maximize your share or your size as you get higher and closer to the resistance level. But there's also where our statistics comes in. You know, if you track these, you have an average of, okay, and now I'm just going to grab something from there because, you know, tracking it gives you so much more learning than just if I told you that the average span of where a stock retraces and reverses in comparison or in relationship to its resistance is within 12%. That is not going to give you that much knowledge. So I recommend you study it. But let's say that 12% is the accurate number, then I know, okay, hey, so 12% in average, that's when stocks with this kind of resistance level, float, and market cap usually reverses. So then I know that, okay, hey, I have to be more sized in than if my statistics told me that it was 5%. Then I should size in more aggressive in, you know, the 7% area instead of the 12 and 15 or 10% area. So that is what statistics gives you. It's another edge. But you know, this is the way I judge resistance to give me a better accuracy. And I also have another example of this. We have HCHV. I can't pronounce takers, man. HCHV. So if you look into this day, which was the major importance level as we gapped up, you'll see that it's the same principle. The most volume that was traded within that day or within that day in that upper channel was actually even in like here 590s, because then you double top up here, and you know, this top action, we don't know how many shares was traded just within that top action. But so somewhere from 550s ish all the way up to, I would risk 6 because that is a round psychological number. And then you'll see on that day 7-Eleven is this, yeah. So you actually have that day up here. So if you look to the day where it gapped up, you'll see that it topped out at 585. So this gives you more accuracy for getting a feel for where the stock might be starting to reverse and where it starts to struggle, not just firing off. But that's my way of doing it. I recommend you finding a way, but that is just a quick tip. What was it? ICA. I forgot what ticker it was. So let's talk about how I treated, or even how I managed this trade. ICA. So how I played it, and I said that we're going to talk about some fear of execution, and that is not a better time to do that than now. So lately I've been fearing, or been challenged with fear of execution, meaning exactly what it says. Fear of trusting my own plan, and fear of execution the trades. So I've been sitting around by the sidelines very much, I would say, of my trading time, screen time, just watching stocks, drawing out this an arrow or paper trading, saying, hey, this is going to reverse, it's going to crash, and then as it ends up doing that, I'm getting frustrated that, hey, why didn't I take my trade? If you have similar problems to me, as with that, I recommend you, if you're not comfortable trading small size, as of which I did as of yesterday, I said, hey, this is within my plan, or I have been checking everything, every aspect is matching. This should be a good trade, and not just to say, start, to rethink and having that fear of execution. I said, hey, just trade it, man. Just trade it. So what I did, I traded it very small size. So if you have the same problems and you afford to, if you have a bigger account or intermediate account, like medium account, I would suggest you trading it with really small size, just to see how often you're right and how often you're wrong. I didn't do that personally. I actually tracked my performance. So I wrote an Excel file where I said every time that I drew out an arrow, like if I were to draw out an arrow when we came to this area and said, hey, now I'm taking my starter, this is 200 shares at 250. Then I would type that into my Excel file, and then I would pretend that, okay, hey, I covered at 190. Why? To keep it really serious, because you have to be serious about overcoming your problems and developing. And if you're not taking it serious by being meticulous, by writing down what you're doing, it's going to be a lot tougher rather than just sitting around and feeling, hey, I did that and that, but you don't have any proof or something to touch on, an Excel file that shows you. Because in the end, that showed me, okay, I'm right 8 of 9 times or 8 out of 10 times. So, now I can start to trade this. And that was exactly what I did. And these arrows can be left here because if we get into even more, if we zoom in even more, I shorted some. I took my starter at the 245 area, so actually quite accurate to this arrow. Took a starter here. Then I felt that this was getting weak because we couldn't have any major bounce. So I set a limit order at like 234 when we got down here, because I had a feeling that it would bounce up to the 234 or 235 even to test this kind of resistance area. Um, but we didn't get up there. So what I did real quick was that I took another starter at 232, and then the rest is history. We dropped, and I took half of my shares off at the 190 area, in average 190. I was thinking of taking just one fourth of my positions off there, but I wanted to pay myself, and we had dropped a significant amount of percentage from the top even. But here's where some of the tricky parts come in, or at least for me. So yeah, I had my half of my shares left when we started to spike up here, and what I did that I am going to improve on until next time, because I took an emotional trade up here. I covered because I got scared and I wanted to be locking in profits. I got greedy, didn't want to see those profits, even though it was small profits. Didn't want to see them just vanish and disappear. So I covered my whole position, my original position, up in the 212s, something like that. And then instead of going away from the computer, that is something that I recommend highly. When you exit the position, I just sat there and I saw it stuff at 212 as well. Then I started to think about. I came to the conclusion, and I was probably getting hit by confirmation bias, because 212, okay, and then I started thinking, hey, the opening price was 213. I think there is something going on there. There could be a green-red resistance area up here. So I took I took the original size that I had scaled in here, and I chased weakness at 206, risking that 213. So that ended up being the loss that I took. So the biggest lesson from that is, because I know that my statistics shows me that in average we get to a certain percentage from the high, and that's where you should take some off, because it usually bounces, and sometimes, or in average, it bounces and then it kind of flats out, but sometimes it gives you a really good drop in the afternoon. So so the risk reward, or even the risk reward of holding through that bounce is better than not to, in terms of percentage and in terms of risk return, or risk reward. But I had forgotten that, actually, if to be honest. So I wasn't meticulous enough about checking my statistics. That tells me that you should take all off here, or if you're in it to hold it, you're going to hold through this bounce, and this bounce is this amount of percentages in average. If we get above that, then you should start considering taking off, because then the trend is changing and stuff like that. So yeah, I think that is all I wanted to talk about. And to conclude, how to judge resistance, we talked about that. Going into the intraday chart at least works perfect for me. I get a better understanding of where the stock might start to retrace or reverse. Fear of execution. If you, just like I did, have problems with fear of execution, I recommend you trading it with small size and tracking how many times you are right and how many times you are wrong, so that you have statistics that, and the reality shows you that, okay, you're right, I don't know, 4 out of 10 times, then you should probably change something in your strategy. If you cannot afford to trade with small size, just as I did paper trading, and I was very meticulous about setting out arrows and screenshotting everything because you want to make it as real as possible. And last but not least, statistics gives you an edge, and statistics can give you the comfort of holding through stuff like that, or stuff like this bounce that I just talked about. So, tracking statistics, why it's so important to track statistics and not only read them is because you're going to get a better feel for the pattern, how it usually works out. Because if you only read something that someone else has tracked, you don't know exactly what their like what their knowledge or what their reason for tracking this was from the beginning. So, for instance, I track where it bounces and how high it bounces in general to be more comfortable when the stock starts to bounce to say, hey, okay, this is normal, this is average. I could just keep on holding through this because in average it usually fades and dies. So I think that's all, guys. If you have any other topics that you want me to talk about, please leave a comment. Super happy to interact with you guys. And until next time, have a great one. Hope you trade well, and peace, guys.